I think we definitely see it into at least the US election and probably beyond. You mentioned earlier in the program about a contested US presidential election. This is something the markets will be absolutely disappointed with, because uncertainty is something that they avoid. And hence, I think this volatility we've started to see over the last 3 weeks is reflective of some of that concern, and this is likely to continue.
Well, what will be a catalyst to end that? You mentioned the US election. What about stimulus coming out of the US government as well?
Yeah, it's sort of tied up, isn't it? Because the reason why we're not getting a decision on stimulus through the Congress is probably politically based, because they can't come to an agreement and they're at odds on the quantity and structure of any stimulus. So that's, yes, would be a positive factor if they can come up with a solution, but it's probably tied to the political climate that we're in. Obviously, good news on vaccines, something with a specific timetable of delivery that can see an end in sight to the pandemic, particularly as we're seeing second wave effects in Europe and other parts of the world. And then finally, I think economic data, somewhere where consumers are starting to become more confident and spending more.
In this climate, then, what do you like across the Asia Pacific?
Well, I think in China clearly is showing a level of recovery that is stable. It's hardly stellar, although the production figures recently are pretty good, and the retail sales, most recent retail sales wasn't so bad. So you can back China into having a fairly healthy recovery at this point in time. And so those economies that emerge around China will benefit by association. India and Indonesia, on the other hand, are probably going through the middle of the pandemic, much more heightened uncertainty there, probably less value right now, but obviously they're going to go through that stage similar to what other economies have done, adapting to the new normal when it comes to the pandemic.
Do you think we're starting to see a V-shaped recovery or perhaps a U-shaped recovery in China?
I think it's interesting to talk about shapes. Everyone loves the alphabet. So V is probably unlikely. U is more than likely. But then you've also got potential of W, which is where we start to look like we're getting a recovery and then we start to fall away. And that is some of the concern we're seeing in Europe in some of the high frequency data that's coming through, that already the recovery is starting to wane, which suggests that you could get a double dip back down if we don't see a result in the vaccine or we don't see economic growth stabilize. So that's one of the concerns. And then the other shape that probably hasn't been discussed a lot is the K-shape. And the K-shape is where we see recovery in some sectors, but declines in others. So a very uneven recovery. And that's quite possible as well, given the fact that the consumer in most global economies is still struggling to be confident.
Yeah, some talk, especially overnight, that we could see a so-called double dip recession. What about markets that are exposed to tech here in Asia, like Taiwan and South Korea?
Yeah, well, definitely. I mean, they benefited obviously of the big strong run we've seen in tech. Tech's been overbought, obviously, and we saw that towards the end of August and into the beginning of September with the options-related sell-off that occurred after a big ramp-up. And so I guess we've got to find a base in the tech sector in the US to see how then the secondary effects impact those who supply that industry. At this stage, we don't expect it to collapse. We just think at the moment there's a repricing going on in line with economic forecasts and in line with the political uncertainty ahead of us in the US right now.